Good evening. Dan Fitzpatrick here at StockMarketMentor.com on Thursday, March 22nd. And look, I want to look at Apple. This seems to be like the flipping stock of the century or whatever. Everybody wants to know Apple, 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 Apple all the time. Here's the deal. 600 is a pretty key level. At least it has been ever since it first tested it back here, failed. Then it came up here, rallied a little bit, then it's come back down. This is just the level. Here's something that a lot of people aren't really looking at from a technical standpoint. Declining volume. Okay, as the stock generally moves higher, if you really want to feel good, really get the feel good about the move of the stock, you want to see an increase in volume, not declining volume. But this has been one of the things that's been so kind of difficult to trade about Apple, because look here, declining volume. The stock went up. Wouldn't it be nice to still be able to buy it at 470? Same thing here. Look at all this low volume, which is not a bad thing to see when a stock's in a basing pattern. You kind of want to see low volume, and then when it breaks out, you want to see really high volume. But we didn't even see that here. The stock first started moving higher, and volume was low, lighter than average. Okay, so the point is, this is just a difficult stock to trade. It's not a difficult stock to hold. It's not a difficult stock to own. What is difficult, and a lot of folks, kind of secretly get this, you all own call options on this stock, which is fine. A $600 stock, for crying out loud, Who wants to pay $600 for a stock when you can own an in-the-money call option at 580, 570, 560, and it basically trades at par with the stock? To me, that seems better. What doesn't seem better, though, is if you say, oh, well, options are super cheap, and you get all leveraged up to where when Apple drops from 609 down to a low of 595, you're absolutely crushed. The only reason you're crushed is because you have so much leverage on this stock, and you're listening to all the analysts who are saying this has a $700, this is a $700 stock, $750 stock, etc., etc. All of which may very well be true. Sounds good to me. The chart matters. Stock just keeps going up. And when I say the chart matters, uptrend or downtrend? Uptrend. In any way you look at it, this is an uptrend, so you want to be long. The question is, how long do you want to be? How much leeway are you going to give this stock? My suggestion is this. You look at this resistance line. When the stock on rallies stops confirming or reconfirming that resistance line, but instead starts kind of doing this. Maybe it's still going up, but it's not hitting here. Okay, that would be different. That's when you want to look to at least start taking profits on Apple. Again, volume, declining volume, it should matter. It just kind of hasn't in Apple. I wish it did. I wish this was an easier stock to trade, but it's not. But I'll say it again. It's not a difficult stock to hold. The uptrend is quite clear. It's just that the stock, when I'd been waiting for the stock to break through 600, looking for more upside, well, it broke through 600, gives you $9 of upside, and now it's just consolidating. So cherish this. Embrace the horror. Embrace the thought that Apple's going to drift sideways for a while, and may in fact even drift lower. There's all kinds of bears coming out now, and a couple weeks ago everybody's bullish. Now they're trotting out the bears, and that's just the way it goes. That's why every tennis match has two players, because it's really boring if one guy's just playing by himself in tennis. You lose so many balls, it's unbelievable. So what you want to do here is stay long with a reasonable position size. Reasonable position size. Remember, one call option controls 100 shares of stock. Controls. If you bought 100 shares of stock at $600, it would cost you $60,000. So if you're buying say 10 call options, what are you controlling? You are controlling $600,000 worth of stock. And with all of that leverage, it's a double-edged sword. It's really, really great. It slices all the way through the dirt and into your profits. You just love it. You're making all kinds of money when the leverage is working for you. But when it's working against you, you know what? It'll kill you. It'll crush you when you are too leveraged. So I want you to always keep this in mind when you're trading stuff like Apple or Google, Priceline, Intuitive Surgical. It's really, really tempting. And in fact, it's actually prudent to be using options. Just don't get overloaded on them. I'm telling you, you will wind up buying high, selling low every time because you're buying because you're chasing, and then you're selling low because all of a sudden discipline comes in and says, oh, no, I got to get out of this position. You will sell right at the low and then wind up buying them back at the high yet again. How do I know this? Am I looking over your shoulder? No, I'm a trader. I've made these mistakes too. Every so often, you know what? I'll still make them. Don't tell anybody, but every so often, that's just what happens. Trading, the most, the most difficult aspect of trading, the least efficient part of the mechanism of trading is you and me. We're the ones that are making decisions. So hopefully you use what I'm saying here, some advice, some observations or whatever, and trade Apple a little more prudently here going forward. Okay, members, get over to the strategy session. Last one of the week.